Hi guys, welcome back to another mykayaplus podcast. Today's topic will revolve around one stock that I believe many people are interested in. They just released their results, and of course, when the results are released, the share price went down. Uh, of course, if you ask my opinion, I wouldn't be surprised of Tesla's results. I think if you have been following the news and you are not blind on the so-called updates that Elon Musk and Tesla themselves has been providing, you know that the results wouldn't be that good due to the ongoing price reduction activities that they have been doing. So, of course, today we will talk a little bit more. I think the gist of it is that a lot of people who owns Tesla stock today, they want to see Tesla price go up. So we will try to approach it from a logical point of view and see what does it take for Tesla's price to hit $500 per US or for in terms of USD, right? Right. So I think without further ado, let's just go into the sharing. Of course, just a brief disclaimer that we will just flash through. This is not by any means advice for you to buy, sell, or hold any stocks, right? So just do your due diligence, and this is just our personal opinion. So I'll pass it to Chun Bing. First, um, what makes Tesla so special? And do you think that it has the potential to go to $500 a share and then eventually 1,000 and above?
Yeah, I think the timing wise is also a little bit special. I think Malaysia officially launched. I mean, that's officially launched in Malaysia. There's a lot of hypes going on. There's a lot of booking. If you are following some special Facebook pages, you're seeing people sharing their booking slip. And then the waiting period seems to be can go up to even middle or end of 2024 by rumors. Of course, I think these things come in and then associated with the news, I think released weeks back talking about the whole delivery hit historical high. Of course, if you're the fans of Tesla, you think everything is very positive. Without actually realize there's something that maybe some landmine that you may not aware of. But before we go into the details about the result, I think there's also a few interesting perspective that we wanted to share uh, just to give you a perspective of even though this stock is kind of special, it's technically the first brand that basically associate their name into electric vehicles. If you're Malaysian, this is like instant noodle versus Maggie. You basically link the brand as the term itself. So I think Tesla they deserve it because they are the one that bring this into this kind of level. But what we wanted to share today is a lot of people will think they are like Apple when they release the car. This is like the Apple moment, the iPhone moment, and so on. But we just wanted to give you another perspective that is not like Apple, even though it may seem to be like one. So the key thing about Apple is you if you are a MacBook owners or any Apple device owner, if you look into the details, you will see these kind of things designed by Apple in California, assembled in China, India, Vietnam, or whatever. So the key thing is designed by Apple, right? And then behind the scenes, supported by a lot of providers, big names like TSMC or Foxconn that actually do all the manufacturing stuff. And of course, at the end, it becomes the end products delivered to you with the Apple brands. How about Tesla? So Tesla, they are not just designing the EV itself, they also own the manufacturing plant. So the one that we are sharing here is the so-called giga factories by Tesla. So if you're not aware, Tesla have a mega plant across the globe. So they got one in Berlin, they got one in Shanghai, and so on. So basically, they own big plant to produce cars. They are not just a designer themselves. So what does it mean if you go into this? Jupan, maybe you wanted to share some thought. Why this is very important. Being a designer purely from the upstream versus the one that go into manufacturing, what is the key impact?
Yeah, so I think if we can just take a little bit of example, in the chip sector, you can see that the fabless companies, the likes of AMD, Nvidia, they are always going to grow much faster. They are going to have the better margins compared to the heavy lifting TSMC, the fabs, right, the foundries. So it's not to say that it's not good, but when you are in a manufacturing business, it's always about economies of scale, right? You need to ensure that your plant runs at full capacity, full maximum, so that the fixed cost actually gets even out, right? And that is how you improve on your margin. Whereas for companies that are pure, I would say, asset-light business. So look at companies like Apple, companies like Nvidia. So they don't have manufacturing concerns, right? They don't need to be worried about fixed costs in the sense of what TSMC is worrying about. So you can see that in terms of the gross margin, right? Apple takes the assembled iPhone and then sell it off to us as consumers. Yeah, they probably be taking around 42% of it. So every $100 spent to buy an Apple product, $42 goes into Apple's pocket, right? So that is something you need to be aware of. So out of this 42, it can be used to pay salaries whatsoever, and then don't you have a net profit. But whereas for companies like Tesla that owns a factory that owns gigafactories, the profit margin is at 20+% only, right? So for every $100, the car value that Tesla sells, they only get to pocket $20, and then out of the $20, they have to pay the other costs. And you look at the list of most valuable companies out there, you can see that out of the 10 most valuable companies right now, only 2 companies are manufacturing companies. So it's not easy for a manufacturing company to become valuable or, attain the kind of valuation that is that makes it the top 10 most valuable company. So in this, you can see only TSMC at number 9 and then Tesla at number 6. The other companies right there are not really asset intensive business, are not asset heavy. In fact, I would say that most of them, if not all, are asset like business. So it's easy for them to scale.
Correct. I think this is very important, but of course, to be fair, if you talk about vehicles, Tesla still
Yeah,
one of the player that actually make a lot of margin. I mean, compared to mature
yeah,
player like
they do. They do.
Toyota and so on. To be fair, they are like the crown jewel in these sectors. But then the fact
Yeah,
is, if compared with the big boy like Apple, it's quite far apart. And
yeah,
probably this is a concern. But of course, in order to keep up as a so-called hyper-growth companies, they are price that Elon Musk need to pay. So
yeah,
you have been seeing how they are basically keeping them with the game is they keep on slicing their price across the group, be it the selling price in China, US, and so on. And this got a very straightforward impact. The delivery numbers is actually uh, very outstanding. And
yeah,
then also make them seems like a leaders in this space, even though they are actually receiving a lot of competition from player like BYD and so on. But you can argue that if you talk about just pure EV, or you call it as BEV, they are technically the leader still. But then if you talk about EV as a whole, including hybrid and so on, then maybe BYD is actually coming in a very strong manner, right? So all these news that actually come in, if you are actually good at protecting your margin, you need to go into price war. I don't think I remember any time that Apple actually slides their
yeah,
price for their new products.
yeah,
They
yeah.
maybe do it for like iPhone SE, so on the
Yes,
slightly cheaper version like the plastic base. But their flagship product is always that kind of price range. It will
in
go up,
fact,
it will never go
going
down.
higher and higher every year.
Correct. So I think this is the difference that we need to acknowledge.
Yeah,
The drawback, I mean, Tesla is actually facing. Of course,
yeah,
with the price cut, you have to give it to them. The delivery number is actually very, very outstanding. If you look into the latest result, which is Q2, the one that highlighted in yellow is their numbers. So you can see if you compare year on year is, I wouldn't say double, but then it's about uh quite high. It's at 250 to 466,000. It's almost doubled. So all this number is very impressive, but it can't be price of it, right? So that's why you can see if you zoom into the latest performance, right? The year-on-year growth, if you talk about deliveries, you can see like 46% increase in terms of revenues and so on. But it's actually at the price of sacrificing their gross margin. So you can see from Q2 2022 all towards to the latest quarter, which Q2 2023, their margin is going lower and lower. Bear in mind, this is just gross margin. This is not net margin, which is something that you have from the selling price, you minus off your direct cost. So this is not really impressive from a number perspective. Even there are a lot of companies, they are higher than that, right? So this is the price they are actually paying, but for whatever reason, it can be because of a market share and so on. But this is a fact, and they are doing this not just for this few quarter, they will continue with it. So eventually it will be somewhat commoditized to a certain extent. But if it become commoditized, is Tesla still a candidate under the hyper growth stock category? This one debatable. So probably these are a few things that we wanted to actually bring to your attention. But I don't know about you, Japan. Are you a believer of Tesla? Be it from the stock or the vehicle perspective?
I still think they are one of the most stronger players out there for EV, and of course, we'll talk about a little bit more later that it might not be just a pure EV company, right? There are other verticals within their business model. It is a company that's involved in renewable energy, energy storage generation, and yeah, it can also go into other potential aspects as well, even AI as well. But if you look through the numbers later, you'll notice that that might not be the case as of right now, right? In the future, potentially, yes. Because if you look at the market share of Tesla, even though we have seen very good deliveries in terms of the growth, right, just now, but in terms of totality of EV vehicles of market share, produced by Tesla against the total vehicles around the world, even we look at the markets where we considered mature and have been very well receptive of EV, US and Canada, right? It's less than 5%. And this is from Tesla's own report, right? It is not fabricated, and they themselves actually posted. So EV as a totality is still quite small in US, even though it has been a very well receptive market. It has been there for plenty of years, but number is still small. It's still less than 5%. Of course, the trend does look good. It has been climbing. So, and the similar trends can be observed as well for Europe and China. So from here, you know that and kind of understand why Tesla needs to reduce prices. You have a factory that can produce, a good number of cars. And right now, economically, doesn't look good. People might not want to, take out their hard-earned earnings to spend it on a car. And that's why, if you are Elon Musk, you might be forced to actually lower the selling price to entice, people to, take up the discount and buy the cars. And with these orders, only the plant can operate at a far better efficiency, right? You have a plant, you're not like Apple, so you need to make your plant as efficient as possible by ensuring more orders come in. So if I were Elon Musk, I would also probably do the same thing, which is to slash prices and sacrifice the margins. Because if you look at the next slide, if revenue actually does not come from the orders, then you will actually see much more worse results. And we talk about right here the just here you can see that it has been going to be it's going to be a very tough year and period if there's totally no bookings because cars prices set by Tesla is too high, right? So they have no choice, they have to cut prices. And of course a lot of people would be arguing that Tesla might not be the only EV maker. It's not only an EV maker, it is also an combination of energy generation, storage, and also AI, which is true as you can see from this picture. So the more cars Tesla can sell, the more reliant the people are, or the Tesla car owners are, to the energy generation and storage business. And then when more people drive on Tesla cars, more data is being collected, and this data can potentially be a source of revenue if Tesla decides to allow subscription of these data when autonomous driving becomes available and approved by regulatory, right? This is a good business roadmap and flywheel for Tesla, and this has been the reason why Tesla prices have been so high. But I think if you move on to what Tesla is currently doing right now, and if we look back at their latest quarterly earnings, you can also see something similar. But in terms of the quantum of things, sales of automobile still is the top contributor. So we have not seen the shift like we have seen in Apple, where you see that the services, the subscription from iCloud and the App Store contributing more and more in the total revenue. So for Tesla, yes, it does make sense, but as of right now, you can see that automobile sales is still the largest market share contributor to the total business. So it needs to grow that aspect until it hits a certain threshold before the energy generation business and also the services business can grow at a higher pace. Yeah, so I think this slide just reaffirms what we want to actually share, which is deliveries can be very good, but the margins, the EBITDA, the net income, even the cash flow has been affected. So you can see that it has not been trending upwards in tandem with the deliveries of the vehicles, but for the past few quarters, it has been coming down. So I think this has reaffirmed what we are trying to understand from Tesla's strategy. And yeah, they're not being crazy, but I think they are just being forced to do it in such circumstances.
Yeah, I think this is also a reason why we wanted to make a hypothetical guess on, let's say, when and how and what is the criteria that Tesla needs to basically hit 500 a share. So I think this is quite interesting one, and we have prepared something to give you a side-by-side comparison on how to actually achieve it. So maybe Japan, you can take us through on some of the assumptions that we have put in.
Yeah, right now Tesla is around USD 260 per share. So of course, most people are, assuming that when and can Tesla hit 500 USD per share. So we'll do a little bit of maths to actually come to that conclusion. So on the left column, you see Tesla's matrices. If it is priced at 260 per share, so market cap is around 800 to 824 billion, enterprise value 800 billion. Enterprise value over revenue 7.15 times, enterprise value over EBITDA 28.45 times, and the P ratio is 66, right? If Tesla were to be traded at 500 USD per share, that has to almost double up in terms of the market cap to 1.5 trillion. Enterprise value up also to 1.5 trillion. Enterprise value over revenue also doubles up to close to 14, so 13.75 times. EV over EBITDA also close to 2 times up to 54.7 times, and the PE also will be roughly up by double to 137 times PE ratio. So this is something you need to assume that if Tesla hits this valuation, then the share price will be $500 per share. So we try to compare it against an existing company in the likes of Apple, which is the world's most valuable company. So this is where things become interesting. So you can see side-by-side comparison. If Tesla is at 500 USD per share and Apple is at where it is right now, which is 190 plus USD per share. So the ratio of it would be Apple will be 2 times more valuable compared to Tesla. So basically Tesla, one Tesla equals 2 Tesla equals to 1 Apple. Right, that is the ratio, and so forth goes it for the enterprise value, and also the EV over revenues and etc. So the question that would make you realize whether Tesla is expensive or not at $500 a share, Chumbing, is this. If you were given USD 3.1 trillion USD and you are able to choose to either buy out Apple totally or to buy two Tesla equivalents, which one will you choose? From there, you actually know the answer, right? Because take down, we know the business model of Tesla. We also know the business model of Apple. And when given a choice to compare these two companies side by side, you know which one you'll spend your money on. So, Chumbing, what say you if that's the case?
Of course, from owning a vehicle perspective, I still like Tesla. But then if you talk about investment into a stock, Apple seems to be a very straightforward option in this case. But of course, this is just a fun comparison that we wanted to make.
Yeah.
We wanted to give you a perspective to compare. If let's say we are truly bullish about this stock and then we want to push it to 500, this is all the assumption that it need to be materialized before it can go to. And then if we actually go to USD 500 per share, then we compare it against Apple, and this is the result, right?
Yeah.
And of course, one of the key things that we wanted to also share is, in order to hit that, the EV over revenue need to be hit about 13.75 or close to 14. So maybe Japan, what does it mean? And have
Yeah.
Tesla ever hit this kind of level before?
Yes. So here is the fun part. So we know that the profitability of Tesla is being sacrificed. So it's not fair to use any matrices that link back to profitability. So the P ratio might not be so fair to judge Tesla. Right? So we use revenue to judge Tesla. So over the historical past few periods, even though just now we talk about for Tesla to hit USD 500 per share, it needs to be traded at an enterprise value or revenue of around 13.75 times, right? But historically, there were periods where Tesla actually traded at an enterprise value or revenue of 13.75 times. So it's roughly around the period of August of 2020, right? So that is roughly around the Q3 2020 period of Tesla. So at that moment, Tesla actually did trade at 13.75 times EV to revenue. So if we look at the results back then, what made people so bullish on Tesla that it is actually traded at 13.75 times EV over revenue. So you look back then, here you have it, the Q3 2020 results of Tesla. You see everything has been very rosy and very, very, very positive, right? You see revenue has been growing at 47% Q on Q and 42% year on year. And the exciting and the fantastic part of the rate back then was that the gross margin was actually growing, right? 22.8%, 22.5%, and all up to 25%. And then at Q3 2020, it actually hit around 27.7%. So this is very far off from what it actually achieves today, which is around 18%. It's even lesser than 20%. So you see that the better gross margin actually push up everything. The operating margin also went up from 4.1% up to 9%. And then EBITDA margin also 17% up to 26%. So back then, it seems fair because everything was going so well for Tesla. The stars were aligned, right? Deliveries were high, revenues were high, profitability was good. So of course, under such circumstances, Tesla should trade at a relatively higher EV over revenue, but not as of today. As of today, we see the margins being compressed due to the price slashing activities. And that is why you see Tesla at a lower valuation than it is today compared to where it was in terms of a few years back. So I think we also did a similar engineering. Let's say if 7.15 times EV or revenue, which is Tesla's valuation right now, is fair, right? We assume that Tesla's price right now is fair. So what does Tesla need to achieve to hit 500 USD per share, but with the current valuation, right? So we don't boost up the valuation too much. So maintain the valuation, but in terms of revenue, what does Tesla need to achieve? So current last 12 months, Tesla does around 24.03 billion USD in terms of revenue. So to even maintain the enterprise value over revenue of 7.15 times, Tesla need to double their revenue, more than double, right, to hit and record 216 billion in terms of revenue, right? If we maintain also the EV over EBITDA of 28 times, current last 12 months EBITDA of Tesla is of 19 billion, needs to grow to 54 billion to actually make a fair valuation of 28 times EV over EBITDA at $500 per share. The same goes for the PE ratio as well. If we think 66 times PE is fair for current Tesla, so the current EPS or earnings per share is a $3.87. So it needs to actually go up to $7.54 for it to qualify for the same PE of 66 times, but to be traded at USD $500 per share. So almost everything is double up. So food for thought in terms of that. Do you think Tesla can, double up their performances, and when they can double up their performance? 2, 3 years, 4 years, 5 years to actually hit a fair valuation, as we mentioned, and to get to USD $500 per share. But Chun Bing, your thoughts and your comments after we go through that mental exercise?
Yeah, I just wanted to give not so close kind of example to give a perspective. So I think back then, if you look into the business model of Grab, you may be you are attractive to it because it's a sharing economy. Everything is rosy, like how Tesla is painting the whole thing back then. But the fact is, if you just talk about ride hailing, talking about sharing economy, it seems like they are much better payer in terms of generating margins if compared to the traditional taxis. But when this thing become more commoditized, which is what Tesla is going through, your whole ride hailing, you actually have a lot of costs being add on. So it's not that lucrative anymore. The driver need to buy insurance. All these things add up. But you already give the impression that you need to give this kind of price range so that people will think it's actually worth it. If not, technically you are no different with taxi, besides you are more convenient, you can order through an app. So I think Tesla somewhat go into this kind of direction. Eventually they are closer to play like Toyota or whatnot into this kind of space. So in order to become this kind of player, it will become more and more commoditized, and eventually your gross margin can maybe drop down to 15 or even 10%. I think for the gross margin to maintain is already a very challenging task. But for them, there's another perspective. Of course, if they cut their price and they manage to double, triple, or even quadruple their sales, then the whole story probably still stay. Whether this is true or not, I'm not sure. But from a lot of news that's happening around my friend and whatnot after the launch on Tesla in Malaysia, it seems like positive, but time will tell. But if I want to take a step back, I think before you go into it and be very bullish about Tesla, you just need to consider a few more angles. It's not the same with what it has been presented 2-3 years ago. A lot of things has been actually going to far more realistic. Price has gone down and so on. So the reason why it become so attractive to the Malaysia is because the starting price is 200,000. So it's not that expensive anymore. If it come in as 400,000, I believe the kind of hype will not be the same like what we actually have right now. So it comes with a price, and the price is actually sacrificing the gross margin, which also means from a stock perspective, it may not be that attractive anymore. So this is some of my take as a whole on what Tesla is all about.
Yeah. So I think the only cut left on their hand is that, more automobile sales, and then in the event of that, more reliant on the energy generation storage business, and also the AI catalyst comes into play. All of that would be, I would say, asset-like business model that can actually boost up the profit margin significantly. But as of now, it is considered in a red ocean business model, even though market share wise, EV is still less than 10%, less than 5%. So that is our takeaway from today's sharing. Of course, if you do agree with us, let us know in the comments, like, and share it with your friends and family. Hope that they also, see this perspective of investing into EV companies at this juncture of time, right? You're not saying it's a bad company, it's just saying that right now things are particularly tough for companies like Tesla. And of course, if you really like our podcast, do also suggest to us what topics to cover in the upcoming session. But if that's all for today, we will actually see you in the next one. Take care. Bye bye.